Hi, my name is Troy Emory, and we're going to talk today about the new tax changes in 2018. I've been in business now for 11 years, and we're going to get into the new tax changes that everyone's talking about these days. Here are some of the things that really are in the code to spur economic growth. Increased depreciation expense. The bonus depreciation. Okay, let me back up. There's something called Section 179. That's where you can actually deduct off up to the total price of the assets that you purchase for your business. Okay, um, that limit has gone up. I can't remember what the doggone limit is. I believe it's $1 million now. I think it's $1 million. Don't quote me on that. But and then the assets that you purchase is up to, I think it's 3.5 million. So you purchase up to 3.5 million. You can take up to $1 million in Section 179. Okay, so Austin is going to go and deduct his $1 million this year. So um, bonus depreciation, right? Bonus depreciation is a different type of depreciation where you can make a choice. You can say, hey, I'm going to take a 179 or I'm going to take a bonus depreciation. The bonus depreciation works in scenarios where you don't have sufficient income, because with the 179 you got to have sufficient income. The bonus depreciation, you don't have to have sufficient income to absorb the additional tax depreciation. So that bonus depreciation has gone up to, I was going to do this on the business when we talk about businesses, it's gone up to 100%. So, the thinking is if you invest in these assets, it's gonna really spike the economy. So giving people more depreciation is a quick way to go out and buy more assets. You buy more assets, companies are doing better, people will get employed. This is the thinking. We already talked about the flat tax. Now go back. Here's one that here's one that not many people know about. Anybody heard about this one? Opportunity zones. Now this, you know what? When I did some research on this one, I really got excited about this one. Let me tell you what this does. Um, they have identified underprivileged neighborhoods throughout the country, right? And what they did was they said, hey, look, if you invest into these communities and you hold on to these assets, then when you sell these assets, there's no capital gains. None. Did you just hear what I just said? None. All right? Now, again, these are in lower income neighborhoods. And you can look at this and you can say, hey, look, this might be a road to greater gentrification. But it can work in the opposite way. It can work in the opposite way. If minority investors get together and say, hey, look, I want to revitalize communities and I'm going to hold on to these assets, I believe it's 7 to 10 years, then when I sell those assets, no capital gains. As a matter of fact, it gets even sweeter. If you sell an asset in 2018, like a capital gains type asset in 2018, and if you put that money into what's called an opportunity fund in 2018 or 2019, then that counts. That counts. You won't be paying the capital gains on it. You just have to hold it. So let me say that again. If you had some assets right now, say you're holding on to some houses right now, houses, stock, whatever, and you sell these assets right now in 2018, and you put those into an opportunity fund, you don't have to pay the capital gains even now. Even now. That's a great, great incentive to really, I guess, put some funds in these low-income communities. Now, I don't know personally anybody that's doing this yet, and I'm assuming that this is only being taken advantage of by very, very wealthy people, right? Who have lawyers and accountants that really have, they have a network of people they can go to and say, hey, look, we can take advantage of these funds. But I plan to go into this deeply in other seminars, and hopefully I can get the right people in the room and say, hey, look, you guys should look at this. You guys should look at this. If you think about a long-term play, you're investing your money and zero capital gains. I mean, what other vehicle is going to give you that?
So if I own hypothetically 123 Main Street in one of these opportunity zones, and I transfer that real estate asset to an LLC,
Mm-hmm.
when I sell it in 10 years,
Mm-hmm.
no capital gain.
There's no capital gain. It has to be. But here's the key thing: the money you invest in it, it has to go into a fund that you designate as an opportunity fund. And it doesn't sound like it's really difficult to do.
Okay.
When I read the regs on this, it's not like you got to go give your money to a bank that says, I'm holding opportunity funds. You just have to designate the bank account as an opportunity fund on your tax return the minute you do it. Right, right. So there are no real complicated rules to really declare something as an opportunity fund. You know, they got other things in the code that make it kind of difficult to do these kind of things. Like, for example, 131 exchanges. You got to go to an intermediary, and an intermediary holds the money, right? They do the transaction, approve the transaction, write up the closing and all that kind of stuff. You don't have to do any of that. You just need to declare it on your tax return and say, this is an opportunity fund. That's it. But I think this is one of the things that are kind of people are overlooking in the tax code. But I think a lot of opportunity can be gained here.
You know if it has to benefit the community in some way?
Well, if you invest in the community, I would assume it's going to benefit the community. I explain.
I guess I'm thinking more like almost when I hear opportunity funds, I hear in the zone.
Mm-hmm.
I think of
HUD.
501c3s. You know how when you create the 501c3, you have
Mm-hmm.
to confirm and verify this is going to benefit the community or the persons you say it's going to benefit, or else or else you can lose your 501c designation, right?
I got what you're saying.
Follow me?
I got exactly what you're saying. And you're right. No, that's a good point. That's a good point. Because I was reading that there are ways that they are checking to see whether you're actually doing investments in those declared communities. Now, I can't remember exactly what it was, but there are some checks and balances here to see whether you are actually doing investing in those communities. If that's no, it's too soon to see exactly what they're doing to actually do it, but it's right there in the code. It's right there. Now, how they're going to implement it, I don't know. I really don't know. But you look at some areas around here like Baltimore, some communities in Baltimore, it could be a great thing if it's done right. I'd ride through Baltimore sometime, and it's so depressing. Not to pick on Baltimore, but they have problems in some of those communities. They can't seem to get up. But something like this would be a great thing.
I thought one of the things I thought he was, President Trump was talking about, he's talking about bringing in factories, et cetera, in the cities. I thought I heard him say that. So that's all I'm thinking about this.
Could be.
Is that what he was talking about?
Could be. I don't know. Could be. But I mean, when you look at other changes to the code, this is one that's pretty unique. It's pretty, at least that I'm thinking of. I don't know if you guys know some other code incentives that really are designated towards lower income, underprivileged areas, and it's part of a tax overhaul. I can't think of one.
Something like, I mean, if just want to go to places like Puerto Rico where
Mm,
you get a lot of tax benefits.
that's
They're
right.
going to save taxes, they want to set up business there.
And actually, Puerto Rico is included in
Yeah,
this.
that's
That's one of the areas. Puerto Rico was in there. Yeah. So you've done some research on it.
My boss actually has some investments.
He has opportunity zone.
No, he has investments in Puerto Rico.
Oh, I
So
see.
we were talking about it.
I got it. I got it.
He's thinking about big more.
You know, I was talking to some real estate investors about a month ago, and you know, I was shocked at what they said. They said, "Look, if you want to invest money now, buy Puerto Rico."
That's right. Property.
Yeah. So I mean, it's smart, very very smart. If you guys want to reach me, you can reach me at 301-474-1040, or you can email me at troy_emery@tdecpa.com, or go out to our website, www.tdecpa.com.